Today is Tuesday, May 25th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services, Archer Financial Services, or ADM. Today's guests are Steve Freed, Vice President of Grain Research at ADMIS, Alan Bush, ADM Investor Services Senior Financial Economist, and Dennis Smith, Ag Risk Specialist and Livestock Analyst at Archer Financial Services. Steve, let's start with the grain markets this morning. Why are grain prices continuing to trend lower, and do you feel we're near support?
I think we're trending lower for a couple of reasons. I think number one is the U.S. Midwest weather has turned very favorable over the last couple of weeks, so it's hard for the market to rally under favorable weather conditions. We also note that there was a private estimate of U.S. corn acres as high as 96 million acres, and when the managed funds saw that, they liquidated their positions. If you go from maybe a U.S. carryout for 21-22 in corn of 1,500 million bushels, 1.5 billion bushels to 1.9 billion bushels. We've also seen a slowdown in China buying world soybeans because of lower crush margins.
Let's talk about China, Steve. Can you talk about the new policies in China placed on commodity prices and the impact on grain?
China came out with a policy that they want to stop speculation of commodity prices and hoarding of commodities. And so they want to bring commodity prices down, and that has hurt copper, that's hurt iron ore prices, it's hurt grain prices. We feel, though, that they still need to buy corn. They bought probably 15 million tons of new crop corn between U.S. and Ukraine. They've just given another licenses for another 7 million tons, and so it's impacted the commodity prices because of this new policies. And I do think, though, when we look at soybean prices for November, East corn and July wheat prices, we are near critical support.
Dennis, as we look at China, perhaps you could comment on the current hog situation in China. Are they fully recovered from the ASF crisis, and what is the expected impact on feed demand as a result?
Well, according to the Chinese government, they have recovered up to 98% of the pre-COVID hog inventory. That's a little bit questionable. We do know that African swine fever remains in the country and periodically will pop up and cause problems. So it will continue to be a battle, but they are at a pre-recovery phase up to 98%. They're also feeding much higher protein to the new hog herd, so to speak. So we're looking at a diet that consists of corn and soybean meal in much greater concentration than before COVID, before African swine fever. So feed demand should be very good as far as Chinese feed demand and corn demand for their hog herd.
Dennis, there's been a lot of talk about a hole in the numbers, butcher hog numbers going into the summer. Do you agree? And what will this possibly mean to hog prices down the road?
Yeah, now as far as U.S. hog prices and a hole in U.S. numbers, yeah, we definitely believe we're in a hole, and we think we're actually entering into a larger hole going into the middle of summer. We should see two things occur. We'll probably see numbers drop off, and we'll probably see weights drop off substantially. Keep in mind the hog herd here in the U.S. is no longer using the feed additive Paline, and this is something that was utilized extensively in the summer heat to keep hogs gaining weight. So without Paline in the diet, why they are expected to lose a lot of weight during the summer months, and it's already starting. So reduced numbers, lower weights should mean a big drop off in pork production, and we think higher hog prices, say into the July 1st to middle of July timeframe.
Dennis, let's look at beef. The Packers are thought to be making more than $800 per animal in their processing operations. However, cash steer prices continue to struggle. Can you explain this?
Well, it's not easy to explain, but the Packers are towing the line here of keeping the slaughter pace under wraps. And typically, you would expect the slaughter pace to increase substantially because they are incentivized by huge margins, as you've indicated, over $800 per head. That's not been happening. And the one reason why the Packer says it's not happening is because of labor issues at the packing plant uh, on the backside of COVID. They continue to not have success at keeping employees in place. This is being complicated by generous unemployment benefits and concern about the vaccine. So it's still all coming into play. It's almost like a slow motion from a year ago that we cannot keep employees at the packing plants. Exactly how much of this is reflective in the light slaughter, we don't really know. But we're not killing enough cattle, and feedlots are not current. And that's created this situation in which wholesale beef prices are sharply higher, yet the cash steer market is kind of stuck in the mud.
Thank you. Alan, the stock indexes. What are the main fundamentals and price outlook for the stock index futures?
Well, the main fundamental continues to be the low interest rate environment, not just here in the US, but globally. Even though there was some talk about the Fed possibly tapering their asset purchase plan, that being released at the minutes from their April meeting. But overall, interest rates still very low historically, and that is very much a tailwind for the stock index futures. So currently we are in a congestion pattern, and I think ultimately we will break out to the upside for the stock index futures with what I'm seeing technically and fundamentally.
And Alan, go ahead and give us your update on the fundamentals of the precious metals markets as well. Which one of the precious metals will be the leader in the complex?
Well, I think the gold will be the leader, and silver may be having some problems catching up to gold. If the global economy is not quite as strong, at least as far as the recovery, as many analysts are anticipating, silver would tend to be a laggard to the gold. But I think both gold and silver are headed higher. I think it's, once again, the low interest rate environment that is supporting the precious metals. And in fact, just today, we had the gold market advancing to its highest level since early January. So gold will be the leader and continue to be the leader, but both gold and silver, I believe, are headed higher.
Steve, I have one more question for you today regarding the weather. What's the latest U.S. Midwest 30-day and long-range weather outlook?
NOAA came out with a 30-day outlook in the U.S. Midwest of normal to above temps and normal rainfall, which is good for the crops. It's interesting that our private weather consultant came out yesterday with a report saying that the Pacific temperatures are cooling, and that as they cool, the chances of ridging increases. So right now, we'll probably see more ridging in the western U.S. If it continues to cool, we could see some ridging in the plains, and they're already forecasting drier weather for the Dakotas and northern plains. If it gets colder down the road, we could see some ridging in the western Corn Belt. So we're going to be watching these temperatures in the Pacific Ocean and watching for any summer drier and warmer conditions than what we're seeing right now.
Alan, just looking at the markets here this morning, I see the U.S. dollar fell to a 4-month low today. Do you feel the downtrend in the dollar will continue?
Yes, I do. We have some concerns about the economy as far as the rate of growth. Also, the Fed is very steadfast in its thinking that they will not be pushed into raising rates sooner than they are planning to. Even today, we just had new home sales and the consumer confidence index both coming in on the weaker side. So the fundamentals still appear to be on balance bearish for the dollar index. And I would see the next support coming in at 89.15. And I would not be surprised to see that tested and ultimately taken out to the downside.
Thank you all this morning. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services, Archer Financial Services, or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.